It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. It is a welcome back. Joseph James here, Thursday evening, June 11th, 2015. Thank you so much, by the way, for your patience while I went through my scheduled power outage. Don't get me started. I'm just happy we had power turned back on. Here in Los Angeles, if you live in LA, you know exactly what I'm talking about. Anyways, dining by candlelight on Wednesday. We're back here, though, today. Thanks again for all your patience. I really appreciate all the great emails I got. Boy, that S&P, geez Louise. All right, before we jump into newsletter, though, make sure we take care of some business here first. Please remember everything I'm going to talk about tonight's video. I teach it to all of our students here at schooloftrade.com. Check out schooloftrade.com. We get a great free trial on there. Live support if you need any help. I'll talk about that at the end of the video tonight. Also, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. There are 3 reasons why you should be watching this video on our trading blog. 1, you can download all the charts you're going to see in this video tonight. You can download all of them and use them at your leisure. Friday, next Monday, whenever you need them by following that link right below the video. 2, you get a free pass to come out and attend our trade room. If you're not a member of schooloftrade.com, I would love to give you a free pass. Come test drive our trade room. We'll give you the student of the day, right? Student for a day, free pass into our trade room, upper left-hand corner. And then, of course, lower left-hand corner, pardon my ugly mug, you'll see a spot there for your name and your email address to join our nightly newsletter mailing list. That way you'll always get an email from me every evening when the newsletter goes live. So, as always, download the charts below the video, grab your free pass, register for the newsletter list. Also, too, don't forget, if you grab your free pass or you register for the mailing list, check your inbox, check your spam, check your junk folders. I'm going to send you a verification email to make sure you're not a robot and to make sure I have the right email address going forward. Shall we begin? Absolutely. Okay, so Euro's acting very, very rational right now. We successfully retested the high. If you go back and watch the newsletter from earlier this week, we talked about this back here. We talked about the goal of the buyers was to retest these highs. That's exactly what happened. Now that we have the proof from the buyers hitting these highs, now got that trend line here, yeah, pulls back all the way to the trend line, gave you this buy zone on Tuesday, it was a Tuesday? Yeah, Tuesday night. We've now pulled back into our buy zone now, and we are pushing higher. So taking a look at this chart here, everything, boy, what a well-behaved euro we have here. Now, just a heads up, you're most likely going to see the euro roll over on Monday. It's either going to be Monday, Tuesday. I would guess Monday. Tomorrow is the quote-unquote official rollover day. But remember, day traders, guys, we look at volume. We don't look at the actual rollover date. So if I look over here at the euro right now, you can see volume here. It resets past 6 p.m. But bottom line, though, is that we haven't rolled over yet. Check the volume between the 6:15 and the 9:15. I would say on Monday morning. I wouldn't waste your time on it tomorrow. It's not going to be rollover tomorrow. So you've got this 6:15 until Monday. Sunday night, for all you Forex traders out there, definitely check the volume. You're looking for volume to roll over to the 9:15 contract, and then you'll trade the 9:15. Okay, got that off the table here. Euro is bullish after testing the major trendline support. Yep, talked about that. Got the major trendline support. Yep. And that trigger zone support, right? Yep, same spot it was on Tuesday, so that's no surprise there. Okay, buyers, we're looking for pullbacks at support areas on the way up to resistance targets overhead. So as we're coming off, rotating off this high, we're looking for pullback trades here at levels of support. Now that's where we can really help out tomorrow in our trade room. If you need the short-term levels of support, I can't predict everything for tomorrow. We do a pretty good job every night here, giving you the basic direction, major turning points. If you want short-term levels, come see me tomorrow in the trade room. We'll give you more of those than you can handle. So you'll have plenty of areas of opportunity tomorrow. You've got your targets waiting overhead, with the juicy targets still waiting to be tested. Remember, I see you 1500. I see you 1500. That's a nice looking target up there. It's a measured move target. It's kind of a double whammy for the measured move, right? A, B, C, D, big one. And then, of course, the smaller one, right? A, B, C, D. That's really, this one, this little, what is that called? Magenta, pink, right? That color, that, the measured move resistance right about 1500, I think is the most important. And it comes off of this channel back here. Wait. That really? Yeah. That channel actually tells me that this measured move is really important. If you don't know what I'm talking about, you should, and you definitely can learn more about that inside my advanced course. If you're a member of mine, you know exactly what I'm talking about. Okay, so we know that there is a long-term target. This is the euro we're talking about, right? The euro and the S&P are very similar in market personality. Usually they don't give you very big spikes in one day. Don't tell that to the S&P the last 2 days, though. Woo! I did call it on Tuesday night. Just saying. So we have ourselves targets at resistance, and again, we know what the goal is. The goal is back to 1500 as we go. Now, sellers, if you're a bear right now, what's to do right now? What if you're a bear? Well, buyers are looking for pullback trades as we push higher, while the sellers are going to wait patiently for those times where the buyers look to trade long and where they fail. Remember, guys, the easiest way to trade opposite to the long-term trend, right? Because I'm sure there are some folks on here right now that say, no, Joe, I know what's going on. It's going lower. Okay, well, if you're a bear right now on the euro, it's fine. Look for short-term areas of support, right? Prices going up, right? Okay, so find an area of support, wait for price to pull back to it, and then wait for the sell, right? Wait for the fail. You know where those stops are going to be. Sell into those stop losses. Use a nice quick first target. What's going to happen? Sell stops get triggered, right? Sell. It's going to push down to your first target, lock down that stop, get rid of the risk, and then hold on to it. Remember, though, if you're going to be a bear right now, everything is a scalp until proven otherwise. Okay? Don't get too greedy on these counter trend moves. Okay, right now you got to remember the trend is your friend, and because we tested this high here, we know we're probably going to try to find a way back up to it. Okay, now you get the plan for the euro. Buyers buying pullbacks. If you need short-term levels, come see me tomorrow. Sellers, wait for those buyers to fail. That's the easiest way. Just don't sell into these major support levels. This would be where you want to be worried about selling 1181, right? 1181. Don't want to sell into that support level, okay? So you can go down to it and you can go below it, but don't sell into it. All right? Again, you know where to reach me tomorrow. You know my address, right? schooloftrade.com. You come out and see us in the chat room. Okay, moving to crude here. Crude, long-term bullish. Boy, this is one of two markets this week. The S&P's the other. Jeez Louise. You don't see the S&P put more range on the table than the crude does very often. But like we said, I'll talk about that in a second. We get a huge overcorrection on the S&P. It's pretty much what we expected. Here's crude, though. Crude, long-term bullish. Remember we said on Tuesday. On Tuesday, we had this as our channel. And we said, geez Louise, look at this huge overshoot, right? So it's got to pull back. Why does it have to pull back? Well, again, when I see an overshoot like that, whenever I see a huge straight line like this, I picture that poker table where all the bulls, there's a bunch of bulls hanging around, they got their good horns on for the party, and they get all their chips in the middle, right? They get all their chips in the middle. So the bulls are there with all their chips in the middle. How do they get the chips back? They cash them out, right? They take their profit. The only way it goes higher now is until it entices a few more buyers, right? So the buyers are fully committed up here to 62, 61.75, right? Buyers are fully committed. Chips are on the table, right? They're all in the middle. So now the only way for those buyers to continue pushing higher is either two ways. One, they got to take their profit and then buy it again. When they take their profit, what do? They sell their way out of their long positions and price will come back. What's the second way? We've got to entice these buyers to ante up again. How do you entice a bull? Let's try not to keep it on track here, folks. How do you entice a bull? That could have gone in so many different directions. Stick to your day job, JJ. All right. I'll leave my comedic relief out of this video right now for you guys. That's my other YouTube channel. I told you I live in Los Angeles, right? I know. Back to plan here. So we're expecting the price to pull back a little bit deeper, right? How do you get more buyers interested? Bring the price down. How do you get more buyers interested? Bring the price down. So you know how this goes, right? Supply and demand, supply and demand. Demand gets really weak for the buyers up top, right? Price comes down. All of a sudden, those buyers that bought down here are going, ooh, 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 we can get even more right here. And so they're looking to come in now, right? So bottom line is overshoot has to result in an overcorrection. It's just a matter of physics, okay? It's the way it works. That's why the S&P snapped so hard, because of the overshoot, and it also had to do with a little bit of the fact that we were in a long-term major channel, which I talked about on Monday. Anyways, crude oil, long-term bullish, short-term bearish. I'm going to call this a flag pattern, right? This is a flag. And if you're wondering why crude's been a little bit sluggish this week, it's because of this pattern. The flag pattern is something you see, a spike in channel would go higher, right? So a spike in channel would have price going higher. That's a spike in channel. Okay, this is a flag. What's the difference? There's really no difference. They have the same personality, the same technique of trading it. The bottom line is, though, this is a flag. A spike in channel would be a channel going higher. The flag pulls back. See the flag? Right? See the flag? I marked this territory for crude oil. That's a flag, right? And you can see it. It's pretty easy. So it's a flag pattern. That has a lot of the reason why the last 2 days have been a little bit slow. Because remember, the buyers already have all their chips on the table. And the only way this thing goes back up higher again now is if it entices more bulls. Right? What attracts a bull, by the way? I'm thinking of a clever thing to say. I don't even know what attracts a bull. Anyways, leave me a comment, right? But anyways, so that's what's causing it to go slowly. There are ultimately, the one big thing you got to remember about a bull flag like this is that it starts with a spike. It starts with a huge spike up. That spike is your big clue to look for either a flag or a spike in channel. I'm going to show you that next on the S&P. Okay, we haven't seen the rest of this yet on the S&P yet, so stay tuned for that in a second. So again, then the crazy spike, that's what tells you, okay, this is irrational. This is irrational. It can't keep going on forever. Now, it's either going to flag out, which is a very lazy channel going against that move. Now, I want you to think about why that channel's so lazy. Why is it so lazy? It's frustratingly lazy. It's stubbornly lazy. I can't stand them when they're like this. They really make me anxious, because you're like, dude, this thing just took off. Let's keep going, right? So it kind of lets you down. It's like, oh man, now I got to wait for this thing. But you know why? It's because the buyers are fully committed, and the only way to entice more of those buyers is to get the price back here. There's no more bullets left. Think about it. That's what's happening. That's why it's such a lazy move off that high. It makes sense to me. Hope it does to you, right? Okay. And again, the exact same situation is the spike in channel. It's the same thing. Okay? Lazy channel marked by the pole, right? The flag, or the flagpole, right? That violent spike. Okay. So that slow, lazy channel that follows the spike up, that's your technical and kind of personality clue to a good spike in channel, or, a flag, right? Okay. The one thing you want to remember is they both result in deeper corrections. Okay? Write that down. They both result in deeper corrections. We spike up, we flag down, right? There's your deeper correction. Again, they got to reload the gun, right, before they push it back up. Then expect a measured move, right? So the measured move's coming afterwards. That's coming next. You got me? Okay. Same thing applies to a spike in channel, right? Spike up, holy Christmas, right? Goes crazy, lazy channel, and then a bigger correction before the measured move, okay? Why the bigger correction? Because the bulls are fully loaded, right? They're all anteed up. They got to attract those bulls again with lower price, or they've got to take their profit. Now go back to the chart. Now you can see here why I'm going to say you got to be keeping an eye on 60 right now. 60 looks pretty delicious, right? Looks pretty tasty here for those buyers to want to re-enter and for the sellers to want to push it lower. So we know we have a bullish market, but we're bearish in the short term. How bearish, might you ask? I can't tell you that, guys. If I knew that information, I'd be hanging out with Richard Branson on that crazy island he's got, which I got to go to someday. I hear he does tours and tickets and everything. Anyways, buyers will be looking for opportunities at the lows of the major bull channel. See the major bull channel? When we saw the overshoot of this channel, if it doesn't immediately correct, then that tells you get a multi-tier channel. That's what I did, right? Took this, well, what we thought was a previous little single channel here, and we said, all right, you win. Multi-tier channel. This really doesn't matter because this is where we get our eyes on here for you bulls, right? You bulls will be looking for, that's your push higher from the bulls. Whether or not we go higher from there, that's to be determined. We'll wait for that tomorrow and Monday. Sellers, though. Sellers definitely have an opportunity here right now, but you've got to be careful. You'll notice we've been able to hold over the 200 moving average here. So, like I always say, just like the euro, you're in a bullish market right now. Where do you buy in a bullish market? I'm going to look to buy that low, right? And if you go out and take the ABCD off the highs, you'll notice the low a day today was right at the measured move. If I had to guess right now, though, they're not going to make it that easy on us. I would imagine they try to push below to 59.83, and then we get the run up. I hope they do because that's where all the bulls get to reload again, and this will be a nice push off. At least it should be a nice push off it. We'll wait for proof. Remember, professional traders, we anticipate for a living, but we always get proof. So we'll wait for proof on that. So we definitely have support here at 60.19. If you are a bull, you really want to wait here for price to get down before you really get the best buying opportunities. Now, if we do just take off to the upside here, if personality confirms it, and it might. This is Crude we're talking about. There's no reality in this market sometimes. So if it does push higher here, just make sure you don't buy into these resistance areas. That's your only worry for tomorrow and Monday, right? Because I'm not going to be here tomorrow with you guys. It's Friday, so next one will be on Monday. That's the only one you really got to worry about is if it does go higher here, you're clear to go, but you just don't want to be buying into those resistance areas. Now, let's talk about you. All right, so buyers know you either stay patient and buy around the 60, or you jump on right away, and I mean right away because you're going to get a lot of resistance there overhead. Sellers, just like I said on the euro, you're in an uptrend right now. But you do have the fact that there's plenty more room to get down to that 60. Look for short-term support areas and sell into where those buyers are failing. You heard it here, okay? Just be careful selling into support. Wait for the buyers to get the grade, right? Wait for them to take the bait, and then look to where their stops will be and sell into their stops. Tight first target, lock out the risk, and hold the runner. Capiche? All right, we get the plan here for crude. Let's wrap up. Moving to gold here. A little wishful thinking here. A little bit of gold here now. Gold is bearish, coming off the channel highs. Really not a lot has changed here on gold since the beginning of the week. You know, the beginning of the week here, we talked about the fact that we were trying to come off these highs. Well, we got off these highs. Now the sellers are ready to engage. And so, again, bears, you guys have control over this. Sell those retracements at resistance areas. If you're a bear, you got some easy targets waiting for you right now. Okay, if you're a bear, you got some easy targets waiting for you. If you're a bull, you know what to do, right? What do? How do you buy in a downtrend like this? You look for areas of resistance, and you look for those sellers to try and fail. So as we're going lower, let's say there's a short-term resistance area right here, right? Sellers try to take it. Buyers know where their stops are going to be. At least you should. Think about if you were the seller, where would your stop be? And buy right into that stop. All the bears get forced out of their short positions into long positions, helps your long position, and then again, tight first target, tighten off the stop, right? And then let her run. Whatever you do if you're a bull right now, though, is do not buy into the resistance areas. Definite target, and again, this is where members of mine will know what I'm talking about, but we have a short-term channel here, not a very big one, but very short-term. We've now made the break. If these bulls are going to do anything right now, they've got to get it back to 91.3. That's going to give us the late adopters. See, what happens is the late adopters come in. They already saw the move off the high, right, off the low. There are a lot of bulls out there that have the opinion if we're going back to 1,200, right, for whatever reason. Doesn't matter what the reason is. We're looking for now price to retest those highs to prove that the late adopters are really there. bears, you guys are in control. Bulls, look for areas of resistance where the bears will try and fail and buy right into those stop losses. Let's wrap it up here now with the old S&P. Huge correction off that overshoot. Now, remember, it wasn't just the overshoot. I talked about this on Monday. There was a reason why I talked about this on Monday. Perhaps this chart will remind you this was Monday's newsletter. Okay? Now, Monday's newsletter, I talked about the fact that, hey, heads up, later on this week, you're going to probably care that we are at a major turning point on a ridiculously slow chart for the S&P. Okay, it's a 16 anchor. It might as well be a monthly chart, right? For the S&P, this is like, well, look at that. You can see April, for crying out loud, right? So, yeah, it's June last time I checked. So you can see it's a very long-term chart here. S&P is just like the euro. It's not going to move like crude and gold. So we know that because of the volume, right? Yeah, do it for the kids. So we know that we have the long-term bull channel. So there was your channel, right? Overshot the short-term channel into the low. I mean, this was, I don't want to say it was easy, but it certainly wasn't hard to see that thing coming. And I got a lot of emails asking, did you know that this was going to happen? And I said, just watch the video, man. I described the whole thing on Monday. So now here we are. All the way back up, correction complete. The E-mini is short-term bullish, long-term bearish. The correction off the lows was perfectly as expected. Now, here's the deal. The sellers are going to try to sell these highs, which means the bulls need to, and you could probably finish my sentence right now, right? Turn off the volume and you can finish my sentence. If you're a bull on the S&P right now, what are you waiting for? You're waiting for the sellers to fail, right? It's easy. Wait for that resistance, short-term resistance areas to try and hold and then fail and then buy into their stops, right? Okay. Go back and watch any earlier part of this video and you'll hear me describe that a few different times. So we know the correction of the lows has occurred. Now the sellers will be entering at these highs, which means the bulls need to stay patient. Wait for them to fail at resistance levels as we come off these highs. Chances are you're going to see this price try to go lower and look for those short-term resistance areas. As this price starts to go lower here, if we start seeing a resistance area fail, that's your clue now, bulls, that you've got those buyers coming off that long-term channel we showed you in the previous chart. Okay? Now, watch out here right now for that flag or that spike in channel. Do you see it? There's your spike. Remember, spike in channel keeps going higher. Lazy higher, right? That's the clue. That's what makes, in my opinion, a spike in channel or a flag, that's what makes it so difficult to trade. Because it feels like you must be doing something wrong because it's moving so slowly. It always throws me for a little bit of a loop. I always get a little bit frustrated with them, right? Because you're like, come on, let's go, because you're so excited because of that big move, right? So, again, jump up. Bada bing, bada boom. There's your flag. Remember, come back to entice some buyers. 95.50, I see you, 95.50. Or it channels up. Okay, now, if you're a bull right now, you want this baby to channel up tomorrow. If you're a bull right now, all you're going to do is give it till about 9:30, 10 o'clock, and then just buy the low, buy the low, buy the low. Be aware, though, sellers, if that low fails, what did I say earlier about a spike in channel? Spike up, lazy channel, right? And then what? Bigger correction. Why? Because we've got to entice those bulls again. So you're expecting to see a bigger correction if it fails, right? Okay. So watch out for that failure. One of my favorite ways to trade these spiking channels is when they fail, because you're going to get a huge correction. Remember, big pops, big drops. And the reason why you get the big correction is because the buyers are all engaged. They're all in. And the only way they get back involved again is if you entice them a little bit. Okay? Now, watch out for the flag. Watch out for the spiking channel if you're trading the S&P. The spiking channel is going to be the easiest money you've made all month. The only thing that I've got to worry about for tomorrow is rollover. We're going to be sharing volume tomorrow. We're going to be sharing volume. As we speak right now, volume is still weighted towards the 615 contract, but that's not going to last. Tomorrow we're going to be about 50-50. So my gut tells me it's Monday. My gut tells me Monday is going to be your rollover day for the E-minis and the euro and the currency futures. Check your volume. Check your volume tomorrow morning. I don't think it's going to be the case, but check your volume tomorrow. Today was the official rollover day, but as you know, professional traders, we don't just go by the rollover day. We go by the volume. Which contracts trade with more volume? Okay, Bears, you guys have a little bit of the edge right now because of the correction, and it's going to need a bigger correction. So Bears, sell those retracements. Bulls, look for those areas of resistance and wait for those bears to fail, and that's going to give you your best bet to keep buying this sucker. And if you see the flag or you see the spike in channel, I was going to say, you're going to see hopefully you don't see my ugly mug, right? But hopefully you'll remember what I said. It's going to be lazy. And if you see the channel here, sellers, you can sell the high. Buyers, you can buy the low. It's usually very well behaved. And remember, when it breaks, it's going to go higher, right? It's going to go higher as long as it gets that deeper correction. 95.50 is where I'd be looking here for those really nice deep correction years for the next leg up. Okay, and then you're looking for that measured move. I have no idea what's going to happen tomorrow. That's why I'm going to open my trade room tomorrow morning at 8 a.m. Eastern time. We're going to go over all this stuff in real time. All right, so if you need short-term assistance, that's why we have a chat room. That's why we have a full-time trade room. That's why I'll invite you guys to come out and join me. And remember, as I always say, I know you're alone right now watching this video, but you're never alone in your trading career. Come out and see me at schooloftrade.com. I get a great free trial here at School of Trade. You're going to learn more with me on my trial than you will anywhere else in the interwebs. I can tell you that much. While you're here, check out information on beginner, intermediate, and advanced memberships. We offer lifetime memberships. That way there's no pressure. You can earn and learn on your own speed. And I've got someone standing by 24/7 to answer your questions if you need them. All right, guys? Thank you again for your patience on Wednesday. I'll tell you, I hate being out of the office. I hate missing a day, right? The real world is so complicated. Everything makes a lot more sense when the charts are up, but I want to thank you guys so much for your patience while I was out of the office on Wednesday. Finishing up a great week here, finishing up the second week of the month. Watch the rollover, watch for the failures, and come out and see me tomorrow, 8 a.m. Eastern time. My name is Joseph. Adios, amigos. Bye-bye for now.